Martin.
Hey there, folks. How you doing? Welcome back here at the Diagnostic Trading Hour. We had a great session out on Saturday there in Tampa, and just had some beautiful weather there. Had a great resort there at the Hyatt, and had a lot of people come out and learn a lot about Nadex and how to identify trades, setups, reversals, and a lot of other good stuff. So those that came out, appreciate you coming on out there, and those that missed it, definitely make sure you're available to show up next time. We definitely want to look at doing at least one or two more of those sometime here in the next 6 months. So anyways, but I appreciate y'all coming out. We had a great time, and want to go ahead and catch up on where the market is currently at right now across the board, having a lot of pullbacks going on. And what we got is we got the S&P is currently up 8 points, and we got the Russell literally just up a buck. We got NASDAQ up 4.5, and we got the Dow up 124. We got copper up, let's see, 0.025, which is about a 0.68%, almost a little over 0.5% there move. And we got gold up $6 on the day right now. We got silver up 42, which is a 1.2% move. And looking over at oil, we got it about 88 cents. And let's see here, what else we got going on? We got the ags. Corn flattening back out there, up $3. Soybeans, however, falling like crazy, down 33 points, a 2% move on soybeans today. So a lot of trade setups going on right there. Looking over at the currencies, the euro dollar, it is up 39 pips right now. Aussie dollar down 17, pound dollar down 27, U.S. franc down 23, U.S. Canadian up 9, and the U.S. yen up 8 pips. So, just a wild morning. The manufacturing number came in much better than expected, and the market actually started rising a little bit overnight. Really, Europe didn't have a chance to respond to the, I guess you could say, good news of the Spain's bank stress test. And so those came out after Europe had really closed down for the most part. And so when they came out, of course, the U.S. market was able to respond to that and rally up. But the other ones were, really weren't able to do that, and it really didn't carry it through the end of the day. It just, gave it a little bit of a boost. And so the European markets and the Asian markets were able to respond to that overnight, and that's sort of what helped push up the market a little bit even before the close after it's little, pulled back, and it actually pushed back up overnight. And then this morning, the manufacturing data came out, and it was a very welcome surprise, given the fact that the information was so bad last week. And so, we'll be talking a little bit about more of that and the fundamentals and everything else. Bernanke's talking right now, so who knows what's coming out of that guy's mouth, right? But also some information he's talking about, and we'll actually go back and look at what he's saying and the impact that that could have on the day. But ever since he started talking, the market gave up all its gains on the day. So, what does that tell you? But, the Spanish bank stress test results, they came out at noon last week. And looking at a couple other things that went on, we had GDP in Canada and a couple other things, but really not, besides the Spanish bank test, that was sort of the big thing that we had. And looking over, the day before that, as we had like manufacturing, all that other data coming out. But the big thing that we had this week that came out that affected us this morning was everybody was really expecting a bad report, and it came in better on the manufacturing PMI. And, it wasn't exactly, 100% of everything that we wanted, but it was definitely, better than they expected across the board for the U.S. The U.S. came in at 51.5 on the PMI. That's the ISM manufacturing PMI. Anything above 50 is actually considered a good number, and they are expecting 49.8. We haven't broken 50 since May of this year, so that's a sort of a nice positive sign. And you can always go back and, but it's definitely, the S&P is definitely selling off. And but one thing to notice is we hit that. Let's see. I just want to look at that. See the coincidence there. On May 1st, 2012, we exceeded the expected number. The number was 49. Or 53. We got 54. All right. And it looks like actually in June we also got 53.5. So, but that was below the expectation. So we exceeded the expectation in May, and that was May 1st. And what you can see is the market did a rally on May 1st, but that was sort of the end of the rally, and the market started its decline into June. So, just because one good report does not a trend make. So just keep that in mind. That this exact same thing happened where it broke 50, exceeded expectations, and the day after that, and on past that, it declined on down. So what else do we got going on? That really is our big news report for the day on the fundamental side of diagnostic trading. And we had some other things come out. We had construction spending, which actually decreased a little bit. There's been a lot of good reports coming out. Macy's is hiring a ton of employees. Toys R Us is hiring. That's not a big surprise. They're getting ready for, of course, the Black Friday sales that are be coming up here. And they'll have the online sales. And they need customer service people. They need people in stores. They need people in their shipping rooms. All that. So that holiday potential rally, they're getting ready for it. They're expecting it to be good. And they're actually hiring more than they did last year. So... beyond that, we had that come in. We also had a couple other pieces of data which weren't as important just because they're basically based on a lot of historical information put together. And then, let's see here. We got, like I said, Bernanke is, talking away. And we'll see, he is speaking today on a speech about 5 questions about the Federal Reserve and monetary policy. And he's actually going to allow the audience to ask questions, so they are asking questions. So I'm sure his responses are not everything that everybody's wanting right now. And as you can see, we can look right here. When did he start talking? And he started talking right about here, and then the market just started going down. So I guess they didn't like what he's said, because that's about all that's came out that's huge in the last half hour here. And the market has been pulling all the way back down to where basically it opened up. It filled the gap. So it's another gap fill day, and we're about there if we're not there already. Let's see here. The gap, let's see, as far as just the open. You got 830. So at least filled the gap of the opening price at this point. We have about 5 more points to go if we're going to fill the gap of Friday's close. But we have now filled the gap, and we're looking at possibly pushing new highs for the current, or new lows for the current session. And we'll see if it is able to go back and fill that gap in. And we'll see what else we got coming up here. Just want to let you know, if you have any questions, feel free to go and give us a call. You can always find our number on TFNN. Just scroll down, you'll see it right there, 877-927-6648. And if you're outside the U.S., give us a call at 727-445-1044. And let's go ahead and look at the other fundamentals that we got coming up this week. The big thing this week is, of course, going to be jobs. It's going to be all about the jobs this week. And so we have a lot of reports coming out on that. And we'll sort of inch towards that as we're looking through the layout of the land for this trading week. And, what's coming up, what you can expect, what you need to have on your radar. The Aussie is going to be announcing their rate statement, basically their Fed funds, interest rate. And so that'll be coming out tonight at 12:30 a.m. Eastern time, so you want to make sure that if you are an Aussie dollar trader, keep that one in mind. And then we're going to go over, and Britain is going to have its construction PMI. That's obviously going to be a very important number, and that's coming out at 4:30, so that's going to be something that the pound dollar needs to be watching. Also, Spanish unemployment change is going to be coming out. So, obviously, Spain has had a really, really bad unemployment numbers, and so just following that and seeing that is their unemployment getting better? Is it getting worse? And it got worse on the last report. It got better a few before that. So we'll just have to see, how it comes out. But that, of course, is going to affect the euro dollar with everything that's going on in Spain right now. They did pass the Spanish, bank stress test, but it doesn't mean that they're out of the woods at all. And that's going to be the big factor, I think, on this month is how Spain rolls out on everything. And then we also got the other things. We got the 10-year bond auction coming out in Britain. They haven't really had a massive issue on selling their bonds. So, but it has, sort of been ticking up and down, but it hasn't been horrible. So that should not be a big factor, but the Spanish unemployment will be big. The construction PMI is going to be big as well. And then if you look on over and you check out they'll have the trade balance this evening or tomorrow evening over in the Aussie dollar. So that'll be a good setup for you tomorrow night at 9:30. And then looking over at, Wednesday, what do we got going on? Well, we're going to have the ADP non-farm employment change. That number is going to be big. It's going to be important. But it's also going to be this they're going to look at to see, well, what does that say about Friday's employment number? And so that's going to be the big focus on that. That's going to come out at 8:15, on Wednesday, 8:15 Eastern time on Wednesday. That will be a market mover. And we're also going to have the ISM non-manufacturing PMI coming out on Wednesday. And that's going to come out 10 a.m. All right? So that's going to obviously be another market mover for us that day. And then looking over at a couple other things, we'll have, building approvals, retail sales. So Aussie has a lot of news coming out this week. Yen had a lot last week. Aussie has a lot coming out this week. And so just keep that one on your radar. But again, the first look at the true unemployment is going to happen Wednesday. Then, of course, Thursday we're going to have unemployment claims. At the same time that the unemployment claims number comes out on Thursday morning at 8:30, then the ECB press conference is going to come out. So we'll see what they have to say about the progress they're making. I saw a report that they actually rejected it just came over the wire not too long ago, so that, of course, has been contributing to the down move. But the Troika rejected a whole bunch of the austerity measures that were put forth by Greece. So, but they still want to save it, back and forth, whatever. But nobody is happy with them, and they're not happy with Greece, and back and forth. So there'll also be a French 10-year bond auction. That shouldn't be major yet. I think France will be popping up soon, but right now, not a big issue. And that's happening on Thursday as well. Britain's going to be doing their bank rate, so their interest rate. And they're at 0.5. They don't have a lot of room to go down. They could go down, I guess, more if they feel like they needed to. Hasn't really been a whole lot of indication that is on the board. And then looking over the meeting minutes will be a big thing Thursday. That usually is a big market maker recently, at least, because everybody's looking for clues as, hey, they made this policy decision on QE. What did they say? All right. So how bad is it? Or what effect do they really think this is going to have? I mean, none of that money is going in the money supply, meaning it's not going in people's hands, and they're spending it over and over and over again, which is what creates economic growth, which is, of course, what creates GDP, which is, of course, what creates jobs. None of that money is going there. At best, it's going into the market to try to keep it propped up from falling over completely. So, but it doesn't mean the economy is getting better. It just means that money is being pushed into indexes and stocks, whatever. So it's going to be really interesting to see how that plays out. But everybody's going to be watching that's 2 o'clock Eastern time on Thursday, and so you want to have that one on your radar. But we got several big ones with the ECB, the unemployment claims, and then the FOMC meeting minutes, and of course Britain's bank rate. All that coming out. The yen's going to have another policy statement coming out that night as well. So Thursday is going to be full and packed. It's going to start off really big on Wednesday, and then of course Friday we're going to have the employment change, the non-farm employment change right here in the U.S. The employment change in Canada as well. Also the official unemployment rate, obviously a big thing for politics, and a big thing, more importantly, for the people who don't have jobs. And that number may be ticking down or maybe staying the same. The big issue with it is it doesn't matter because people have stopped looking for jobs, so it's not an accurate reading anyway. But hold on right there, folks. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. And we are checking out a few more things for you. We were just looking at the fundamentals and everything that's coming out. Friday, Bank of Japan will have a press conference. So, Yen's basically staying in focus with their QE8 announcement that came out here in the last week. And we got employment change coming out, unemployment change, or unemployment rates coming out for both the U.S. and Canada all at the same time. And that's going to be big. So, again, the employment starts off on Wednesday, goes to Thursday, closes out on Friday. And you got to be watching out for those government announcements, because whatever your trends say, whatever your charts say, at the end of the day, when those things come out, they control the market for a solid 10 to 15 minutes, and then you can check things out and see what setups come in at that point. But just make sure you're being careful with how you trade. And of course, one of the ways that I like to trade, what we were talking about this last Saturday at the conference, was trading on Nadex. And to get a Nadex account, it's very, very easy. If you haven't got one already, just hop on TFNN.com. You'll see a Nadex banner on the right side. Click that banner, and then click on Create Account. Once you click Create Account, simply click Start or open a demo account. I do recommend you do get a demo account for testing with and trading with. They'll give you $25,000 of funding money. They'll give you a few weeks to try it out, and they'll let you go in and just sort of learn the platform, learn the mechanics, see how it works. So you want to learn the sort of like if you're playing poker, you want to learn without real chips first, okay? But eventually you got to see the real stuff. And so hopping over here to the live account, it's only $100 to fund an account. From start to funded can actually be done in as little as 5 minutes. So it's really easy to get a live account, so you're seeing the live quotes and everything the way that you need to see it to get what you need to be able to trade Nadex. And there's a lot of our trading opportunities that come in on Nadex, and a lot of ways that you can trade it, and such as trading off of these bounces and things like that, or off these reversal points. And speaking of reversal points, let's go ahead and check out just deviation levels, and talk about those right now, sort of where we're at. And on the deviation levels, on the upside, we have a full deviation up to 1448. Well, we definitely hit that number right here. As you can see, it popped it by a couple points, then came right down to it, just oscillated right at that 1448, and then fell on back down and basically filled in the gap right there. Not really a gap, I guess, but filled in from the opening rise off of the great news. And if the news was so great, then why did it fall back down? So it was good. It was a good report, but again, a good report is not a trend to make. And came on back down there, and we have a deviation level of about 14 points, and it's let's see, if we're at 1451, and we go in and just do some very simple math on that, then we go 1451. And let's just look at how far does it come down. It's basically come down to 1438. And so we're about a point away or so, and from just a full deviation retracement. So since we're that close, I'd definitely be looking at taking profits on your short at this point. And so a good reversal setup and a good take profit setup right there on the S&P. So let's go ahead and check out some of our other indexes while we're at it. And we had to move all the way up to about, let's say, 845.50 or so. And 845.4 was our actual deviation level. Actually, it may have been 0.4. So let's see what the high is specifically. Was 845.3. So we were at 845.4. Not too bad. And so we came literally right to the deviation level before it turned around and headed on back down. And on the downside, it looks like a deviation moves all the way down to 823.41, and we got to move, let's see here, on the low side to 832.60. Hadn't come all the way down 2 deviation, because that'd be a 2 deviation retracement. So it's come down to about, basically it's filled in the close and it stopped, or from the open. So it sort of fell back down, basically a deviation, moved back down 11 points there. And that was 11 points on the Russell. Going over and checking out the NASDAQ. Seeing how the NASDAQ has been doing today. NASDAQ ran on up like everything else on that report all the way up to 28.22. It's like about 50 or so. And we had a deviation move of 28.21.50. So basically 1 point past the deviation and then fell on back down and is actually looking like it actually did a gap fill as well. The NASDAQ did a full gap fill. Not only a fill of the opening rocket up move, but also a gap fill. And it moved all the way down to 27.86. So it had a pretty massive. We actually had a 30-point deviation on NASDAQ today, so that's pretty huge. And it took it all the way up and all the way back down. So pretty impressive move there on NASDAQ. And again, a good take profit point if you were short. And ideally you were, because it moved that full deviation, came back down. You can take advantage of that, and this is a good point to take your profits or at least tighten your stops. And it's like we had basically the very similar action over on the Dow. We'll talk about that. We'll come back and look at the currencies, commodities, and ags and metals for you as well. Stay right there. We'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. We're going to check out the metals and see how they're doing. So we got copper right here. And looks like it had a high of 3.798. Really did have a takeoff this morning. You can just see that huge rise right at basically the open there for most of the metal pits there, and it took on off. And after that, it just sort of chilled out. Moved on up to 3.798. And a little past the half, almost to a 0.7 deviation level there. And almost hit the 1 deviation move, but not quite. So, but it came really close, and but it is just chilled out. So definitely, once it passed that 0.5 deviation, like we say, we tighten stops, we tighten them a lot at 0.7, and we close them out at 1. And then looking over at gold, we got gold and see how that's been moving. It took off with the market this morning, moved on up to 1794.4, and it looks like it had a deviation of 1792.25, so right about here. Pretty much, not too far past it, about 0.2 past it, came down, sort of, chilled out on that area, fell down, came back up to that same area, same deviation level, and then fell on back down to, let's see, like the low after the fall was about 1773.9, and that's actually the previous day's close there, so 1773.9, so Friday's close, and so basically retraced right back to that level. Looking on over at SI, and it's all about making sure that you're seeing, where are the true price points on the market? Where is the expectation of the market? Not your expectation, not your hope that it'll go to the moon, but how far does the market say the market's going to move? And that's what deviation levels are all about. So going over and checking out silver, and we can see it moved on up to 35.44. And that would have put, let's see here, silver 35.44 puts it right past one deviation level at 35.26. So right here, came up, just oscillated right off that deviation before retracing on back down. And not quite filling the gap from the previous, actually it did fill the gap from Friday, so it looks like it went in and knocked that out. And some good solid levels that it hit, but silver definitely pulled right off that deviation level with no problem. And checking out the energies we got natural gas, and it has just continued to rise and rise some more. And we can even see that there's a lot going on here with natural gas. Just with I mean, it's been going up like crazy. And if we back out and look at it, and this is seasonally not a surprise, but I mean it's been going up. We've been talking about this since April. It's just been rising, and it just broke out the new high, and it's pushing strong on that. And so going ahead and backing on down again to the shorter time frame, just looking at where it went today, went out up to 3.46. And if we go over and look at natural gas at 3.46, that would have been a move right past one deviation, 3.407. So moved quite a bit past 3.407. It actually just rocketed right through it there. And went to 3.494. So 3.494 would have been two deviations. So it was pushing it. It was coming close. But it definitely broke the one. And it pulled on back to 3.424 on its level 4, down to a 50% retracement off of that. So you got a nice golden ratio, GAN, Fibonacci, whatever you want to call it. But you basically got that 50% retracement right on natural gas before it hesitated. And it's traded a couple times now. It keeps hesitating and flattening out right there. And now checking out oil. Oil has moved all the way up to 93.33 before pulling it way back. And it's a pretty big move off of yesterday. $1,300 plus move there. And not as big as some of these $5 moves we've seen in the past couple of weeks, but still definitely a move that gives you plenty of opportunity to hop in and make some money. And it looks like 93, about 40 was 0.7, 93.06 was a half a deviation. So if you were in there, you'd have been taking some profits right here, and or at least not taking profits, but tightening stops. And 93.04, so right when it got to about this point, 93.04, then you would have tightened your stop, but maybe like to the low of the previous bar, tightening it up, and then all of a sudden it turned around and headed on back down. And usually not looking to take up a whole bunch of new entries at that level either. And let's look at some ags on the ag side of things. So we got corn doing a big old bounce on up there on Sunday and then pulling on back. And we check that out. We got corn futures sitting right up at a high overnight there of 68.5. And that would have put us at a one deviation. Basically, it was like a 769.8 or whatever. So about a point off that. And then the pull back down to 752. Well, 756 would have been a full deviation retracement. So right here would have been the retracement level. And it would have retraced that one deviation move overnight. Tried to do a pullback, still came back, and is basically magnetically drawn just to that price level for the day. The big mover of the day is soybeans. So soybeans, I mean, just crashing off of last Friday's close there, just going down, down, and down some more. And seeing right now it moved, let's see, we've got a low of, on the day, 1557. And so if I check that out, that literally is a move down almost to two deviations. But one solid deviation and right in between, almost to the second deviation level before it pulls back. So that was a great trade. I would not even be looking to buy soybeans right now. I wouldn't be looking to do a bounce off that. That was just too strong, too hard of a move. You don't want to fight it when it's moving that hard and that fast. Looking over at the Aussie dollar, had some nice overnight movement, had some good trading opportunities for you early and late night traders last night and early this morning both. So whether you're an evening trader, a morning trader, or an afternoon trader, I mean, Aussie dollar basically gave it all to you. And on the Aussie dollar, looking on up on the high there, we got it up at 1.0402, and checking out 1.0415 was half a deviation, basically what it moved up for on there. And again, you can trade all the markets we're going over right now at Nadex with limited risk and high leverage, but completely defined risk, and you cannot get stopped out of a trade. So if you're interested in these markets, want to get into them, if you're looking for charting, if you're looking for data feeds, I know we can get access to a lot of that data for free. Just email me at dmartin@tfnn.com. Be glad to help you out. And we talked a lot about that this last Saturday. And there's a lot of tools out there. If this is new to you, you're trying to figure out how to, navigate your way around and get access to the underlying data, because Nadex is a derivative, North American Derivatives Exchange. So it's based on, say, the euro-dollar spot, or based on the S&P E-mini futures. And maybe if you're a stock trader, you don't have access to that data. I can help you get access to that data, and I'd be glad to just, point you in the right direction. Just let me know. And looking over at euro-dollar, looks like it moved all the way up to 1.2938. And looking at this, 1.2932 was one deviation. Fell right off of it, so perfect reversal play. And we got a couple more markets. We'll go ahead and check out the pound dollar, and we'll get the U.S., franc, Canadian, and yen as well. And that'll be our wrap-up on the deviation moves. So on the pound dollar, we got moves all the way down to 1.6108. That was, of course, the early overnight session there. And 1.6112 would have been level there. It actually broke past that a little bit and then bounced right off of it. And, just, I don't know, a little bit quiet, really, for the pound dollar for my taste there. But we'll go ahead and take out a U.S. dollar franc. And now there is some movement for you. So if you want to look for something to play with, there you go. U.S. dollar franc moved up to 0.9437. And that's just past the deviation movement, then pulled all the way back down to 0.9351. And so that would have pulled you back down to literally a full deviation move down. 0.9354 was one deviation to the downside. So that gives you a perfect point of, hey, take some profit and get ready for this thing to, possibly go back in the other direction. But U.S. franc is pretty much spent for the day. And we got U.S. Canadian and U.S. yen. So U.S. Canadian had a nice drop down in the evening there, 0.9797. And we can see that it did drop down to basically 0.9790, which would have been the deviation level. So literally 7 ticks away. So you would have been tightening your stops at 0.7 anyway, and would have got stopped out, thing reversed. Went on back up to 0.9841. And on that would have been pretty much a retracement back to the previous day's close. So pretty good setup for reversal play and to take profit for you all at the same time. And then looking over right now at the U.S. dollar yen, and on the U.S. dollar yen, it's moving up to 78.14. That's a 0.7 deviation that you can take advantage of with that. And on there, let's see, trying to see what else we got. That pretty much wraps it up. And had a reversal right off of it. So everything's just, flowing normal, flowing between deviations, really expected moves. And it's not expected closes. It's expected to go up and touch that area, possibly break it a little bit before it pulls back. So that's why it makes a great place for you to look at take profits. That's why it makes a great place for you to look at doing reversals. And you combine that with some of the reversal setups and the volume reversal setups like that Tom teaches, and some of the charting setups that you get from Steve, and you combine it with the deviation levels. You put all three of those together, you get some great setups, and use the volume prices looking for real price, and all of a sudden you have your target profit zone to come back to. And even if you're looking at, let's say you're looking at euro dollar and you're used to looking at the forex, well, you know what? That's why you want to get some futures data, because you hop over to the futures side and you can pull up charts and you can actually look at the volume on those as well. And you've got to add them to your charts, but you'll have to need the futures data to add them to the charts. And yes, it does work well. And I do like to use the volume there. So we go over here, we go show me the volume, and there we go. And so that you can actually use the volume now for your your pullback zones where you're looking to think the market's going to come back to. And so you can see there's different levels and take advantage of that. So now what else do we have going on? So that's our fundamentals. We got that wrapped up. We got our technicals wrapped up. And we got some seasonal. So what's going on with the seasonal cycle? Well, this is October, obviously. We just wrapped up September. In September, we have a couple things going on. One is, of course, the funds are doing a lot of their, rebalancing and everything. That causes usually a negative week. The week after, what's called Triple Witching Friday that happened basically a week ago last Friday. And with this regular cycle, everything was down 1 to 2%. So it's a very, very normal seasonal cycle. And so now we go into sort of a new era here where they've rebalanced, but we also have something else going on right now. Today is the 1st. What is the 1st in the U.S.? It is a payday, okay? So there's a lot of money coming in early in the morning, and these people got paid on Friday as well. And so when that payday happens, people get paid. Money goes into 401ks by default. Goes into mutual funds by default. And then it goes on into stocks because the funds are holding stocks. So that is just something that, it takes place. It happens the last 2 days of the month, the first 3 days of the month. Basically, last 2 trading days, first 3 trading days of each month. And it basically looks at the middle of 3, the 9th, 10th, and 11th, not date, but trading day. So you'll get like Monday, Tuesday, you count up, okay? So 9th, 10th, and 11th is in the middle of what happens, all right? So we had a Friday payday come in, and that sort of gave the market a little bit of a rally, pulled on back. We had first of the payday come in. That also helps out with a little bit of a rally first thing in the morning. Then the market pulled back. So those paydays help stunt down days, and they accelerate up days. And but that's going on right now. It'll also go on again for the next 2 days. You're going to have money flowing in from payroll checks from the first of the month paydays that happen each and every month. In addition, October, known as the Jeeks month, that's when usually the markets, when they make big crashes. Just go back and look historically. They usually have their big crashes happen in October. So now that usually is followed by a very bad September, which we really didn't have overall, obviously, with QE and everything else that went on. So ended positive there. But so we, not necessarily as concerned about a complete crash, but I mean, there's a lot of setups. If you look at them across the indices, really pointing it down. The one thing that will help out is obviously we got QE, so that's money that's going to go not into the economy, but it's going to go into the market because it'll be used to buy this extra $45 billion on top of the $40 billion they're doing on Operation Twist, which is just buying bonds to keep the bond rate low. But the other $45 billion will go in and buy mortgage-backed securities from banks, which of course will then put that money into equities, which will help drive up the market. But it's not as big as it has been. It's only $45 billion this time, which I mean only, right? That's ridiculous. Only $45 billion that we're even saying that nowadays. But it's only $45 billion, and but that will be something that will, ideally they're thinking will help prop the market. And of course, the goal is, I don't think their goal, if I last recall, is to prop up the market. I think their goal is to take care of inflation and unemployment. I don't know if maybe I'm wrong, but the last time I checked, the Fed's funds job was keep inflation in check and help out with unemployment. Well, Operation Twist. Well, that's interest rates. Wait a minute. Buying mortgage-backed securities. Let's see. That actually, no, that didn't help inflation either. Does it help employment? No, because it doesn't go into the money supply, so it doesn't create GDP. So the entire QE has nothing to do with their 2 mandates, which is keep inflation in check, which they haven't done because 6%, 8%, 10% rises in food. So I mean, just pick your poison, but they haven't kept inflation in check. And nothing they've done has had any positive impact on employment whatsoever. And the latest round, the exact way they engineered it, has absolutely nothing to do with helping either one of those 2 factors. So, just something to keep in mind. And, we'll see how that turns out. But, interesting movie coming up that's going to come out here in the next couple of weeks. It's called Atlas Shrugged, Part 2. So you can get Part 1. You can watch it on Netflix or Internet Blockbuster or whatever. And Part 2 is coming out, I think, October 12th. And it talks a lot about basically just taking control of everything and getting rid of the true money supply that you want to have in a free-flowing economy so it can grow. Stay right there, folks. We'll come back and we'll wrap up the market right after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just looking at, some of the effects of QE and what effect it's going to have, and we're seeing that it's really not having a huge impact. We'll definitely see, that more in coming months. But the big thing is that it just, like I said, hasn't had a big impact in the past, so therefore why would we expect it to have a big impact going forward? The one impact it has had consistently that we've seen is it has, of course, impacted the market, but not necessarily the economy, which has been the ongoing struggle. And then the next big thing is, what about when they actually eventually decide to stop doing QE? Because now it's indefinite. Before it was, what's going to run out? What are they going to do next? Now it's like, well, are they going to stop it this month? What about next month? What about next month? Are we there yet? Are we there yet? So it's just going to be this ongoing QE, at least until, Bernanke gets booted or whatever. And it'll be really just interesting to see how it all plays out and what it's going to do to our economy. The elections are going to have a big impact. I was reading a story about a lot of economists that have been surveyed, and they're leaning sort of reluctantly, I guess you could say, towards Romney. They weren't necessarily on Obama. They were very anti-Obama because he didn't understand business, as I think is pretty evident in all the policies that he's made and where he wants to take things. But they're worried about Romney's ability to be a leader as far as in government politics, simply because moving back and forth on so many different issues. So it'll be interesting to see how that plays out. And I thought what a good thing to do is sort of go over some of the seasonal cycles to get you geared up and ready to go, like we talked about. We already had one seasonal cycle that just wrapped up, and that was the week after Triple Witching Friday, and we had that last week. That was down. That followed suit. And then, of course, now we're in the seasonal cycle of usually having a couple bullish days here, and that's the last 2 days, which we had Thursday, Friday, and the first 3 days. So Thursday and Friday both being up on the S&P. And then, today, I don't know, it's going to be very, very close on whether or not it's going to be an up day, but I think we're going to have at least on the S&P, we're going to have an up day. And so, we're going to have an up day today, tomorrow, the day after. Whether or not that's a big up day, of course, completely remains to be seen. But, we're just looking at that seasonal cycle, and that's how, it usually plays out due to just the payroll, the money coming in, going to that. It'll have a bigger impact on the Dow usually than anything, simply because the Dow only has 30 stocks. And, of course, it's going to have those stocks are going to be in a lot of mutual funds. And if you look at the Dow, and it's sort of interesting if we go and we compare like the 4 major indices here side by side. And so I'll go in, I'll pull up, the S&P. We got the Dow. We got the Russell. And we'll go ahead and throw on NASDAQ. And let's see, we'll do 5 minutes on each one. So that way we're just looking at equal charts here. There you go, 5 days, 5 minutes. And just sort of to see the impact that it's had on each one of them. And you can see that the Dow really has shown more strength and resilience today than any of them, right? So we got the NASDAQ, it's just, completely pulled back, filled the gap, everything, not only from the open, but from the previous day's close there. And you got the Russell, who's done a very, very strong move down. The S&P has moved down pretty strong. It didn't completely fill the gap from before, but it still has definitely moved down a lot. But the Dow has basically been the most positive out of the entire group. Again, payroll cycle affecting the Dow a lot today. So that's sort of a consistent theme. You always want to be aware of that one. It's very easy to remember, and it's easy to stay on top of. Again, it's not something you go and go, I'm going to buy because it's the first of the month. But it's something you're going to be aware of when you're looking at, okay, the Dow is probably going to be the stronger out of the indices during these days, only 30 stocks on the payroll cycle. So, going up for the rest of the week, we don't have just a whole lot going on, but we are going to be looking at probably a bearish day on Wednesday seasonally, about 60-65% of the time. That ought to be coming up. But I'll talk about that more tomorrow. Anyways, everybody have a great day and good luck trading. I will see you tomorrow at 12 o'clock Central, 1 o'clock Eastern Time.